Keki Mistry, Vice Chairman and Chief Executive Officer of HDFC, which is India's biggest mortgage company, says that the retail demand remains very strong and that he expects a strong credit growth of nearly 18 to 20% in the medium term. Let's listen in that why Mr. Mistry is still bullish on the retail mortgage market at a time when consumer demand is slowing down.
See, our business is largely giving retail loans, so we are not really in a business of lending to corporates. And the retail demand is very, very strong. Now, corporate demand, you have to really talk to a bank to understand the demand. We do some lending to property developers, and that demand is reasonably good. But the significant portion of our lending, the bulk of our lending, is really directed at individuals, and that is very strong.
Could you outline some sort of a statement as far as credit growth is concerned in FY14, sir? Could you give us some thought on that front?
See, we never get into numbers. We never give those kind of guidance on what the growth will be. But I would say that we've always talked to investors of a growth of around 18 to 20%, not just for 1 or 2 years, but for a reasonable period of time. And we are fairly confident that that 18-20% number we will reach over the next 5 years on a cumulative growth rate basis. So that means every year, year after year, we'll be looking at a growth of around 18 to 20%. Now, it could be a little lower in some quarter, it could be a little higher in some quarter, but generally 18-20% is good. One of the facts which will facilitate or increase the demand over the next couple of years is this increased tax benefit on housing loans, where the interest that you pay on a housing loan is available for an additional deduction of 100,000 rupees. So already the deduction is 1,50,000 rupees of interest and 1 lakh rupees of principal, along with other avenues of savings. Now the finance minister in the last budget has provided that if you take a loan after April 13 and before March 14, then in addition to these existing benefits, you will also be entitled to another one-time tax benefit of 1 lakh, provided you take the loan by March 14. So I would expect that that would give some spur to people who are sort of looking at buying a house and were postponing the decision, will bring it forward.
Where do you see some of the major growth drivers coming in, sir, as far as your company is concerned in FY14?
You know, if you mean location-wise, look, you know, if you take the last 4 or 5 years, the growth centers have broadly, if you take the top 5 places, they've not really changed much. The order may have been a little different at times, but generally, the order is Delhi NCR is number 1, Chennai is number 2, Mumbai is number 3, Bangalore is number 4, and Pune is number 5. But when we talk of these 5 places, it is not business done in the heart of these cities. It is business done, of course, in that city, plus in the periphery, in the surrounding areas of that city. So it's within a distance of 100, maybe 200, maybe a little more kilometers north, south, east, west of these places.
So several banks, especially the public sector banks, seems to be struggling with bad loans and NPAs. How do you respond to such a trend in the banking industry?
See, I can't really comment on what's happening in the banking system, but I can tell you on housing loans, we have seen a 33rd consecutive quarter in March of 2013, where the level of NPLs was lower, level as in percentage of NPLs was lower than what it was in the previous year at that time. So we have frankly, touch wood, not seen any concern on the asset quality front.